We covered a lot in a short period of time. I really appreciate all the panelists sharing their wisdom, which is gathered over years here. Thank you so much. And over to the next panel. Yeah.
That was such an amazing discussion. Thank you all for joining in. While online will always whet our appetite, the offline experience looks like it's here to stay. A big thank you to Anand and all our speakers, Ankit, Vivek, Abhishek and Ishendra. Okay, so it's time to fire up our next session. We are in India's Silicon Valley and there is no sunrise sector that has utilized technology holistically to transform. The online gaming industry of India has grown rapidly over the years. So let's find out from our next guest how tech has enabled this meteoric or supersonic rise. Let me first welcome the moderator for this session on the science of gaming, Moneycontrol's Chandra Srikanth. Request her to please come on stage. And joining her is Bhavin Pandya, the co-founder and co-CEO of Games 24/7, to help us decode this fast-evolving science.
Continues to be
You're
high.
sort of zen about whatever
No,
comes.
you're just dealing with every moment as it comes, right? You have learned to expect the worst. You have learned to deal with the worst. That nothing really phases you, right? At the end, because the fact of the matter is, and this is what I say a lot also, is that it's been 18 years, right? So many comets or meteors have come and hit us. We've sort of, been buried to the ground and come up again. But the fact is, the bottom line is that we're still here, and the history is the best predictor of the future. So our hope is and our expectation is that we'll continue to keep going for another 18, 20, 30 years from here on out.
Right, but where do you think this whole thing will settle? Because now we have significant interest, people are aware of the space, of the gaming space, people are making money out of it. So is there more acceptance now for your business?
So there is more awareness for sure, I would say. And in terms of your question about, what is next, where does this go, right? I think regulation is going to be what's going to really be that next
directly to the PMO to tell them, don't do this because there's a huge employment equation involved. Has it really dampened investor sentiment?
So, if you asked me this question 7-8 months ago, I would have said yes, obviously, because that's when this came out. But we've had some time. From October is when the new GST regime came. We're sitting in August right now, so it's been a good 10 months since that happened, and so we have 10 months of data to look at, and
And I think for me, the biggest learning in this entire journey has been that there is no reason why you will not succeed if you're able to just identify the trends out there. You know, if you're reading enough, if you're following what your consumers want, if you're basically putting things out there, testing them out all the time. Like our train app was built in a hackathon because we felt, why is every OTA just copying the Western model of building flights and then hotels and, you know, in a market where even today, I don't think most of you would know this, only 4% of Indians fly, right? So if you're an OTA building for flights and hotels, you're probably targeting 4% of Indians. And this realization came to us in 12-13 that, you know, if we have to win travel, we have to win trains, we have to win buses, we have to win budget hotels. I mean, that's Bharat, that's the real India. We're not going to build for the western part of India, right, which is people in this room probably. It's not enough, right, to build for that. We will build for you, but I think the core driver for growth for most verticals in the next 10 years is going to come from the India I'm talking about, which has just come online, which thanks to Jio, thanks to UPI has just started transacting. That's where all the growth will come from. And if we don't worry about building for that, you know, we'll miss the next bus or train for that matter. So that's how we thought about it. And I think placing those bets time to time as a company is very important.
Okay, so let's go back to 2020. So you're just starting to think about going public. And then what happened? What was the IPO process like, particularly with that not so small event of COVID that had happened right around then?
Yeah, I still remember, like, I think early 2021, we had a board meeting where we first agreed that that's the direction the company needs to go into. It was a bold decision because this was made during COVID and COVID was not over yet. It was the thick of COVID. But, you know, the confidence we got was from the fact that FY21, which was a COVID year impacted by lockdowns and everything else, we'd actually grown over FY20. Probably the only OTA in the country, or maybe one of the few in the world that actually did that. And there were just a couple of very small reasons behind that. One is, when COVID arrived, we treated our customers exceedingly well. We refunded people before we got the money from the airlines or the suppliers, in many cases, crores of rupees from our pocket. We actually one day crowd-funded money from our employees into a payment gateway account because that payment gateway account ran out of money and we didn't want to make customers wait for a day. Because during COVID, the last worry you want to have, because your health is more important, the last worry you want to have is, will my money come back from that OTA or not? And that was the moment which, you know, people put cultural posters on the wall and say, you know, we're super customer obsessed and all that. I think that's the defining moment when you can live up to that. And we said, you know, even if we die after a few months, we don't care, because at least we'll die a valiant death where we did the right thing. And that was a moment which was transformational, because those people came back and became the most loyal Ixigoers that we've ever had. And they're never going to leave our platform because they didn't get the same treatment at other places, right? And that's why when things opened up, we bounced back to 2x of pre-COVID scale within 6 months. And, you know, like last year, we did 6x of pre-COVID scale, right? So I think some of what you do, which may short-term look like it's harming you, might be the right thing to do for the long term. But it's hard to take those decisions at that time because it involves a lot of risk. One more thing I'll just add. The acquisitions that we did gave us that confidence that we can go. And I think the acquisitions were made at a time when we didn't have the money to buy those companies, but we had so much conviction on those founders, teams, and companies that we actually raised debt. So remember, middle of COVID, companies running out of money, doesn't have more than 12 months of money in the bank, raises debt, buys another company, raises another round, buys another company and files an IPO, all this done within 6 months. This is what happened in 2021 for us. It was just, I think, in hindsight, we were irrationally optimistic about the future. That's all it was. And when others were being conservative, we were being aggressive and saying, this is our time. We just need to go all in. And if things work out, they'll work out in a big way. If they don't, we are dead anyway. I mean, if COVID kills all the OTAs, we'll not survive either. But that was the defining moment and gave us the confidence that, we should go and get this story out to the markets.
So there's probably a bunch of founders here and that will watch this session that are probably thinking about going public. So those who are 1-2 years away from going public, what advice would you have? What would you tell them to think about?
Yeah, and I've met a few of those in the last couple of days I've been in Bangalore. I think it's important to start thinking early about this. So one good thing that happened was when we actually filed in August 2021, and by the time we did our road shows, the market has started correcting for tech stocks, and 2022, we decided to give it a pause and said we'll come back in better times because the sentiment for tech was very, very negative back then. But in hindsight, it gave us a lot of batting practice in the public markets, and it helped us meet those public market investors and educate them about who we are and how we are different. Which, when we went to meet them the second time in 2024, they had a lot of context, and these guys make meticulous notes. So they'll go back in their diary and open, in 2021 you said you will do X, right? And now what have you done, right? And if you have actually outperformed, you get rewarded for it, right? And if you've underperformed, you'll get punished for it as well. But I think the biggest learning which I tell everyone is start early, build an independent board early, get the governance in place early, and don't do it for optics, do it for real, right? Be authentic. The reason why you need governance is because at scale, you can't actually be doing anything that has slightest of impact on how people perceive your company, right? You cannot do that. But also you want to be, as a founder, certain that all your processes are running in a way which are not dependent on a person, right? But are totally compliant with all the regulation, etc. So we were, I think, anal about that, and we've had a Big Four auditor now for 13 years, and Shailesh knows how meticulous we are with MIS and data and all of that. But we had that rigor for a very long time. And what it allowed us, this first filing gave us a 3-year practice session. We had independent board. We were closing our numbers every quarter, presenting them on the 30th day of the end of the quarter, despite not being a public company for the last 3 years, right? So that really helped. But what I'll advise is start early, start engaging early with investors, the public markets, just a few of them, get a sense of how they perceive your story. Make the story simple for retail to understand, right? Because many of our stories are complex. I think it should be very easy for a common person to understand what your company does and how it's different, right? So that's something we worked a lot on. And finally, it's going to be a very, very, very tiring process, but you have to give it all because there are many sleepless nights involved in getting an IPO done. But at the end of it, you'll feel the high on the other side, and it's a sigh of relief to some extent. But the real world starts now. The real work starts now. The 18 years in hindsight was batting practice, and it's almost like the real match starts now.
And I think that point on governance, having seen you guys up close, how meticulous the company secretary is about everything that happens inside the company. He wears a suit on every Zoom call to make sure that, showing the seriousness of how he takes the position. But now it's been a few weeks since the company went public. How has life changed?
Yeah, it's going to be a couple of months already, didn't realize. But, it hasn't changed in many ways, if you ask me, because where the team spends their time or I spend their time is still about making sure we're delivering the best customer experience in travel and solving problems that make sense. I think what has changed is, two things. One, our cap table Excel sheet is a few lakh rows bigger, but it's a huge sense of responsibility, not just me, but the team feels now, in terms of, what we need to deliver from here, right? Because you're out there, everyone sees what you're doing, you're reporting your numbers every quarter, and it's not just this quarter that counts, but you're working on a quarter, 2 years, 3 years out. I mean, what we're doing today will be visible only 2 years out in our results. And I think that sense of responsibility also is a huge motivation boost, because you're not just working for, your pay or your immediate career, but you're now working for lakhs of shareholders out there who are owning a tiny piece of your company, and you better deliver on, the goods. So you feel that sense of responsibility for sure. But where you spend your time, I don't think that should change either, because if the way I look at it is, customer experience is where it starts. It flows into revenue, flows into profits, flows into valuation. So what you see up there on the ticker is a fourth order effect in that sense. And you need to focus on, where it starts all the time, because that's where the buck starts and stops.
Super. Alok, I think we're out of time. For me, this is really a story of how good people doing good things can be successful and finish first. So
And
thank you
backed
so
by
much.
good VCs.
Thanks, Alok.
Thank you so much.
Thank you, Shailesh and Alok, for that fascinating session on how to stay strong through every storm and how it can help startups persist, build, and thrive. Alok came all the way from Delhi, Girish flew in from the US, Mithun from Hyderabad, and Adit from Mumbai, all for the Moneycontrol Startup Conclave. So a big thank you to all of them and to all of you audience. Let's do a round of applause once again for everyone in this room. Okay, so our next speaker, ladies and gentlemen, comes from a small town in Madhya Pradesh and probably understood the mindset of investors from India's hinterland. Groww started off with 600 customers in its first month of operations in 2016 to over 11 million active customers as of today. A market leader in mutual funds distribution and stockbroking in less than 8 years. To moderate the session, How Groww Grew, I would like to call upon the stage Moneycontrol's Chandra Srikanth once again. And joining her on stage is Lalit Keshre, the co-founder and CEO of Groww.
Thank you, Lalit, for coming for the Moneycontrol Startup Conclave. And if I'm not wrong, this is your first interview after beating Zerodha. Don't be shy, the numbers speak for themselves. You have gone past them.
Thank you for inviting me, Chandra.
But what about that milestone? What does it mean for you? You just came from behind and boom, you've now gone past Zerodha.
See, we don't think about it too much. See, the thing is, we started with a mission, and I think we are not even like 1% of that. So there's a lot to be done, and number of customers and so on. These are kind of, it shows that how much impact you have created, but they are also kind of vanity metrics, right? So yeah, I mean, there is a purpose and there's a long way to go there, and we continue building every day.
That's a very founder-like answer that, this is only day 0, day 1. But, I mean, it didn't mean anything for you all internally that, we have kind of upstaged the incumbent.
See, again, these are like, again, we don't think like that at all. Like, we have very high respect for all the folks in the industry, because this industry is not like win-lose industry, right? When the industry is growing, the financial services market in India are growing, and they're very old, and many players, and all of us are contributing in building, right? Making India kind of great by providing access to financial services, making them simple, transparent, and so on. So it's like a kind of a win-win race, I would say.
Right. This has been quite a milestone year for you, Lalit, since the time you were incorporated, and you, of course, come from the Flipkart vintage. There's been a lot of positivity. As you mentioned, this is a booming space. More and more retail investors are coming into the market. We're seeing that for ourselves. But on the flip side, this is also something that's attracting the attention of regulators. SEBI, for instance, has come up with new norms when it comes to F&O trading. There's expected to be more that's coming. So there's good news and bad news for you. What do you make of the current market right now when it comes to discount broking? Do you see a slowdown in momentum because of these changing regulations?
See, very simple answer is I don't know, but now let me give you a longer answer. The primary purpose of regulator is to protect investors, ensure that there is no risk in the system, reduce risk in the system, and of course then grow the markets and so on. The protecting the customer part we share, so Groww, our goal is to basically make our customers' lives better, right? Protect them and so on. So a lot of incentives are aligned long term, right? And I think when markets become better, when markets become more kind of resilient, more robust, you have a kind of, higher growth potential for future as well, right? Because we are part of market, markets, we are slaves to the markets, right? And if markets are good, then you're good and so on, right? So I think long term, I think it's for everything is for greater good, right? I don't know if that answers your question. Short term.
Just how you're going to future-proof yourself, because everybody has now spoken about F&O, how there is, too much of activity there, from SEBI to RBI to the government.
Yeah, so see, Groww is not an F&O company. Groww is a financial services company. They're hardly 15% customers who do trading. And we also, our stance has been trading is a zero-sum game.
Yeah.
If there is a winner, there is a loser. Investing is a long-term game, win-win game, right? And that's been our stance. So if you're trading, then better be skilled about it. What does it mean? If you don't know what you're doing, don't do it. Anything in life. So we have, from that perspective, we build a lot of tools, responsibility, we encourage responsible trading and so on. That's for the customer point of view. From business point of view, it's like a multi-product, multi-business kind of, multiple businesses inside the org. And that's how you kind of write any kind of hiccups or whatever. But ultimately, what matters is the betterment of the customers, right?
Right. Lalit, when you started up Groww, it wasn't the first time that such an app was there, but the approach you took was very different. You decided that you will go after first-time users, and in order to do that, you spent a lot of time in educating them, creating content that would perhaps resonate with them. And many people believe that that has given you a big edge when it comes to searches on mutual fund on Google, or how to invest, what is this, what is that. Most of the search results are Groww because you've invested in that. So talk us through that. How did you kind of come up with the fact that, this is what you will focus on? And what kind of insights can you share with us about these 20 to 25 Gen Z users? What makes them come back again and again to a platform?
See, I'll put it this way. So when we started based on customer feedback, right? So we started talking to our friends, our families, and so on. What are the challenges in investing and so on. And everything that we have done so far is based on the insights that we got from talking to customers. Even today, for example, our roadmap is based on what customers are asking. I'll give you a lot of examples, but this content thing was one of them, right? When We started in 2016, and within like very few months, we realized that, if you are planning to launch something and people are not even aware about it, that means nothing basically, right? Your product is at one place, but then education is very, very important. So we started creating a lot of educational stuff, right? Videos. And we ourselves used to do that. We started Ab India Karega Groww, which is like going to tier 2, tier 3 cities and so on. So that is the insight. And likewise, like if you look at all our decisions, all the products that we launched were mainly driven by what customers want. We started with mutual funds, regular mutual funds, which are like commission. Customers told, we need direct mutual funds. We moved to direct mutual funds. We did direct, then customers started asking for why are there no stocks on Groww? We launched stocks and so on. So likewise, we like all the features also, if you look at our product updates and so on, customers are very, very vocal about what they want on Groww. We get like hundreds of emails. So that's a long answer, but to answer your question on this content part, it was mostly about building what customers want.
Right. Lalit, you're also someone who kind of travels extensively through India, to meet customers in, say, tier 2, tier 3 towns. What are you picking up from there? Why are so many people excited about the markets? What kind of users are you seeing? Are you seeing more and more people come in from smaller towns when it comes to investing in the capital markets?
Yeah, so there is wealth. So India is not just metros, right? India is the biggest error that folks like me can make is like sitting in Bangalore office and like, building imagining what everybody wants. And going out helps in figuring that out, right? And you get like insights all the time. We have, as a company, we have visited like more than 150 cities in last kind of 4-5 years. And I personally have been to some of them and so on. So the main thing is that, of course, there are like a lot of minor insights, but the biggest thing is that, the access is missing. Access was missing. And internet and...
I think it was the jam, Geo plus the jam effect that kind of was a game.
Yeah, so we are living in a time when multiple things came together and created like this path for all of us, right? Where there is internet, there is Aadhaar, there is, there are
KYC.
Folks like us, and then eKYC and awareness and education and everything. And then suddenly you have access, whatever was available to a very high net worth individual is now available to you, right? That is a big kind of barrier that gets broken. And and that's an opportunity, right? And we just kind of, we were lucky to take advantage of that tailwind.
But was it just luck or was it something else? What would you say was the key differentiator for you?
So for Groww, I think of course, luck is the biggest thing in life, which we kind of don't give so much credit to. But for Groww, I think the biggest thing was we just kept listening to customers. And I also believe that if we continue working in the way we are doing, I think we'll continue doing good. Like our customer roadmap, like everything basically, the entire culture, the way we have built is like, just focus on the customer, understand. If we understand them really well, we'll continue building things that they want. Sometimes customers are not able to articulate what they want. So what they say is probably different from what they want, what they need, what they think. But if you understand them so well, if you have empathy, very deep customer empathy, you will be able to kind of understand them and build what they want. Some of our products are we are again very lucky that some of our products are like, customers are very vocal. For example, in stocks, customers will come and tell us, build screener for me or build I need this in your fundamental, in your product page. We were probably the first ones who had beautiful product pages where we give all the information, and they will come, oh, this thing is missing. Even something that we build, they will come and say, oh, this part is good, but you should improve this part and so on. And we are just so lucky about it, right? Because of those customers, we kind of continue refining our product.
Right. Going forward, Lalit, what kind of other adjacencies do you see for Groww? other branches of financial services where you will double down, I don't know, lending, UPI, where do you see Groww headed?
So when we started, we thought we will build full stack financial services company.
It was always supposed to be a full stack financial services.
Yeah, and that is where we are on the path. We started with mutual fund distribution. We launched, then we launched stocks. And then in broking, we covered a lot of other things, like, a lot of other products, including derivatives, IPO, and so on. And then we got into credit. We launched our own asset management, right? The only thing is that we kind of take our own time to launch anything new. We spend significant amount of time in building the product, understanding the customer, and then launching. So stocks, for example, we launched in 2020, but we started working on it in 2018, right? And
doesn't it put pressure on you to speed up the process if your competitors are faster?
See, I think in our industry, this is one thing that I always notice, that people talk about competitors a lot, but at Groww we don't think about competitors, because if you look at the entire India, what is the household network that is into let's say in markets? It's very small. What is the penetration of mutual funds? When we started, there were 20 million investors, and in a country of so many people, right? So if you are 0.01 or not 0.01, now it's much higher. But when we started, we were 0.0001. And if you ask me question, how do you think about competitor? I don't know how it does not just I find it difficult to understand. Even today, for example, in multiple of our businesses, we are if you look at the penetration and where we are, there's a big runway for us.
Right. Last couple of questions for you, Lalit. From a 3-year point of view, what would be your biggest headwind and what would be your biggest tailwind?
I think tailwinds, India is going to grow.
So grow.
Right. Wealth of India is going to grow. People are looking for better experiences, and we are going to benefit that, right? So that's the biggest. So internet, awareness and all those kind of things, digital public infrastructure. So headwinds, you can just invert that. If there would be in the long run, there would be events that will it will not be a straight line, basically, right? There will be ups and downs.
I would imagine regulation would be the biggest headwind, right?
See, regulations, again, as we discussed about those things, right? So regulation is always about customer, is about protecting customer and so on. And if you are also customer obsessed, and that is a greater good, protecting customers, serving customers is a greater good than, anything else, right? I mean, what you need to do as a business is, okay, can you ride through bad times? COVID thing happened, right? In 20, nobody knew about it. So there can be bunch of things that can happen which you are not prepared for, right? So the thing is, if you are a startup, if you are a company, and if you can't pass through that, that becomes like a big problem, right?
Right.
But if you're prepared for kind of bad times, if you have enough cash, if you have enough kind of anti-fragility built into your business, then you survive.
Right. Last question. I know we are out of time, but I can't, let you go without asking this. You grew up in a small town in Madhya Pradesh. I think it was the only English medium school in the district.
Yeah.
Yeah. And after that, you went to the IIT. But your childhood, how did that shape you as an entrepreneur in terms of the way you attack problems, look at users?
So it was a very, very simple childhood, very small city. Grew up with my grandparents and very simple folks. My grandfather always used to say, Sada Jivan Ucha Vichar, which is simple living, high thinking. And the biggest, if I look at from selfish angle perspective, the biggest advantage that I get living in a small town is that now being in Bangalore, I don't struggle in understanding somebody in tier 2, tier 3 city, right? So that kind of helps a lot. What else? I think it is also like you, the delta that you see from where you started and where you are also is like, that's like you see a lot of things, right? Now imagine if I were in Bangalore in a very comfortable kind of, so I would not have seen that path. Now I have seen that. So that also kind of adds some amount to your wisdom, which is probably kind of, I'm lucky to kind of go through that path.
Great. On that note, congratulations again, Lalit, on Grow's incredible growth. And here's wishing you more years of growth. So I think we've used all the puns related to Groww. But thank you all so much.
Thank
A
you so
huge
much.
round of applause for Lalit.
Thank you, Lalit and Chandra, for this engaging conversation. And time to shift gears now. From clicks, we move to bricks. The world of CNC machining, die casting, forging, injection molding, sheet metal stamping. Sounds like we're in a factory, isn't it? Because our next unicorn is one that's making in India for the world. To moderate this session, please welcome Bhavya Dilip Kumar from Moneycontrol and our speaker Amrit Acharya, the co-founder and CEO of Zetwork, to discuss how they are reimagining manufacturing.
Thank you. Thank you so much, Amrit, for joining us today. I'm going to jump right in. I know people are hungry, so we're going to make it as interesting as possible. So, Amrit, when we look at Zetwork, right, it started off as a software firm. Then, you went into hardcore manufacturing. And today it's a both software and hardware-rich company. And we think of any sectors, there's a little bit of Zetwork there, right? Aerospace, the watches that we wear. As a founder, how does it feel? Alok was here, he was telling about it being, there are a lot of sleepless nights, right? But how is it for you? Is it exciting? Is it giving you a lot of sleepless nights?
I think the founder's journey is when you sign up for that, you don't always know what you're signing up for at the time you start the company, but I think the resilience that you build into both yourself and to your business is what determines longevity over a long period of time. If you take a cricket analogy, like, yes, there have been many people who've done well, but there's only one Sachin Tendulkar who, was able to deliver the same performance even when he was 40. So the building resiliency both for yourself, because the journey is very hard. Like, honestly, I didn't know how hard it was when I started. Like, when I started, it looked all exciting. Even now it looks very exciting. But in day zero, it was all excitement and no reality check. And over the years, we've got multiple reality checks. I think how you pick yourself up when you fall down, I think that's what determines longevity.
Wonderful, yeah. But Amrit, when we talk of Zetwork's growth, right, you're a 11,000 crore revenue company. And post-pandemic, unlike for many of the startups, Zetwork did have a tailwind, right? When many countries were moving away from China, wanted to diversify their supplies, Zetworks did tap into that opportunity. But is it still the tailwind for you, or is there anything else that's fueling your growth?
No, so for us, if you look at our journey 6 years back when we started, GST had just been launched. This was 2018. And we didn't realize it at that time, but every customer was transitioning from a pre-GST supply chain to a post-GST supply chain. So which, in hindsight, meant that supply chains in India were very regional. Every state had specific expertise and customers tapped into that. And GST made a regional supply chain into a national supply chain. Over the last 2 years during COVID, that journey became from a national supply chain to an international supply chain.
Yeah.
And my limited point is tailwinds. It's great if you get them. You can't design your business around that. I think what you can design is when that tailwind happens, are you best poised to take advantage or accelerate? We have been lucky that way, that we have benefited from that. But over the long period of time, these things again will be blips. To answer your question directly, yeah, China Plus One is a strong tailwind. I think the public markets in India recognize that as well. India is sitting on a very large opportunity where Make in India is pretty real. Make in India for India, Make in India for the world is real. But that being said, it will only allow you to get that first 1 or 2 years of benefit. After that, you have to compete on your own strengths. And I think that market is, and us as a company, we're heading into that direction where the first couple of years was of China Plus One was like it lifted all ships. The rising tide lifts all ships. But today we'll reach that point where it's not the sector that will matter, but individual companies who perform.
So what is it now? I mean, what do you think are your pockets of demand, and what's fueling your growth now?
We are prioritizing markets which are fundamentally growing, and then if there is a China Plus One tailwind on top of that, that is an added cherry on top. So if you look at markets which are growing, and look, I'm not an economist; it's hard to predict, but a big part of our business revenue comes from the renewables industry, solar and wind. It's almost a third of revenue. It's very, very easy for me to say that in 5 years from now, 10 years from now, there'll be more solar than today. And I may be wrong, but I'm hopefully not wrong about that. And then there are certain other categories, like if you look at electronics in India, the consumption of electronics in India is growing 20%, 30% year on year. And then the mix of how much gets done in China and how much gets done in India is growing 50% year on year. So you pick market segments which are growing, and then if you layer on a mix shift that is happening from China to India, that's an added cherry on top. So our focus will be on renewables, our focus will be on electronics, and our focus will be on aerospace and defense. These are three categories we are spending time on.
Great, yeah. So that's exactly what I want to touch upon next. Do you see you are across all sectors like we spoke about, but is that a risk that you're spreading yourself too thin, or how do you see it? Do you ever feel like you could have gone to a niche segment? Is that a challenge for you basically?
No, I think it's a very valid one. I think for the first 2 years of our journey, we were focused on one single category. It's how I would describe Amazon doing books. In our case, it was steel fabrication, which is very niche. But our journey to diversify started during COVID when, because we were focused on a single category, it was great to build the infrastructure of the company, which is the software layer, the people layer, the process layer. But at that time, it hurt us because we were focused on one single category. Our revenue shrank in the short term. And then we diversified into all of these different end users. While we diversify into various end users, they all share the same capabilities that we are underlying leveraging on. So I feel any business will go through these periods of converge and diverge. Initially, it helps to be focused because there are too many problems to solve and you don't want to add an additional problem. At some point, you realize that time is finite and your ideal customer profile is limited, so you expand. And then today we're back into the phase where we're again converging. So which is why I said three categories, which is renewables, electronics, and A&D. I think these three will drive 80% of revenue for us. We'll still keep doing other things because we want to keep our presence felt in those markets. But yeah, right now we're in the focused phase.
But bringing innovation, isn't it difficult when you are, across all these sectors?
Yeah, I think the trade-off always is bandwidth, and bandwidth is in two forms. It is money and time, effectively, and capital is finite, and time also is finite. In fact, time is more finite than capital. So as you, and also you can't make a very successful claim that you'll be good at everything because nobody is, and I'll say that with all humility for ourselves, we're not good at everything. But what you realize is once you are present in certain niche markets and you discover some gaps, it is always good to double down on those specific things that are working. But at the same time, you need to keep that innovation culture in the company, which is like 80% of the company is focusing on that 80% that is driving results. But you always pick these small teams which keep on experimenting, because today's experiment can become tomorrow's big category. So that balance is what I think hard to do, and something we try and do at our end.
Great, yeah. Amrit, whenever we think of manufacturing or deep tech, our minds go to IIT Madras, and Zetwork do have a very close connection as well. So how do you think these institutions basically, help founders? How significant are these institutions basically?
I think the next wave of innovation will have to be driven by academia and companies combining together. I think the US...
Professors and students coming up with...
I was recently in IIT Madras, we were addressing the freshman class, and I think what happens is the culture of the institute does pass on. So Aether Energy, which is a very successful product-based company built out of IIT Madras, We do a lot of things which is combining software, hardware. And you see that the next generation, they are also looking at these kind of companies. They're looking at, our EV charger business. They're looking at things in aerospace and defense, flying taxis. These are things that do come out of IIT Madras. I think that is important to maintain. One version of that is just the culture of the campus itself, but second is good case studies of companies which have done well. So yeah, IIT Madras can be the Stanford of India.
Definitely, yeah. Amrit, I think we have last couple of minutes. I just want to ask you, you would be the right person to answer this as well. When we think of putting up manufacturing facilities in a state, right? You are Bangalore based, but you do have manufacturing facilities across India, right? So according to you, which state is the best? Or I'd put it this way, how do you decide, where to put your manufacturing facility? What's that deciding factor?
See, the reality of any business or any sector is power laws do exist. So today we are in a situation where if you look at Make in India, it is a rising tide that is lifting all ships. So a lot of companies are doing well. But if you take a few years down the line, some of that convergence will happen in the form of power laws, where some companies will benefit disproportionately, and by extension, some ecosystems which have cracked some things right. So, but the good thing is, manufacturing is one word which combines many different categories. Yeah. So you will see pockets emerging. Like if you look at electronics, both North and South are emerging as strong pockets. Like Foxconn is a good example, built a very big base in Chennai. But if you look at all the mobile phones, they all happen in the North. Solar is big in Gujarat and Maharashtra, but we are now seeing the new component ecosystem coming up even in Orissa. Okay. So it's hard to say. I think I'm biased. I hope the entire country lifts in this journey. But what will happen is sectoral expertise will get developed. Aerospace and defense, there's no better place than Bangalore. It's always been that way for the last 20 years, and I think that's what's likely to continue.
You don't want to answer the which state part?
I'm from Orissa, so I'll pick Orissa.
Right. But talking of, which state and policies, do you think there's enough being done? We do see announcements in the budgets for manufacturing sector, but specifically for startups, do you think more can be done?
Yeah, it's one of those things where actually, if you look at the earlier the stage of the company, the less policy can help. That's my view. Once companies get a little bit larger, because policy as an instrument is something that has to be democratic by design, and hence it cannot be tailored to one specific company or one specific sector. Whereas the needs of young companies are very, very unique. Because they have identified a gap in the market which only they know, which is why they exist, and hence forward. What I think the big difference can happen between when we started the business and today is like the inflow of more domestic capital. I think that is something which could be designed through policy, could be designed through just market participants, thinking that the next great set of returns can come from this vintage of companies. I think whatever we could do to encourage that will take the ecosystem to the next level, because today it's still heavily reliant on foreign capital. Right.
Yeah. And Zetwork is a unicorn, more than a unicorn, 2 billion valuation, and your revenue is like 11,000 crores. You're already profitable. You've said that. So what's next? Would we expect an IPO, or are you focusing on more M&As for expansion? What's in the cards?
For us, IPO is always a goal we want to get to.
But timeline?
The company started in 2018, so we are still a little young. But what we are doing is we're creating the right infrastructure that enables us to be a public company, at the right point in time. I would still say we're at least a couple of years away.
Right. But will there be more M&As that we'll see? Are you looking at acquisitions?
Our goal is very clear, that we want to provide high quality manufacturing within the categories we operate to the customers we serve. Our preferred approach is to do it the way we have done it so far, which is the asset-light model, marketplace, a lot of software. Once in a while, we notice gaps in the market, which we we can either ignore that gap or we can decide to do something about it. So whenever we have done M&A, it is with that goal. It is what is that problem we are solving, which is customer backwards. Are we the best person to solve it with the current systems we have, or do we need help outside? So we have done some M&As, but it's not a big part of our plan.
Understood. Yeah. I think we've almost done. I'm going to let you go with one rapid fire question. Amrit, what's your North Star? I mean, do you want to be the Foxconn of India?
No, we don't want to be anyone of anyone else. I mean, look, we started as an Indian company, but today a third of our revenue comes overseas. We are truly trying to build a global franchisee. I think we are exporting both software, we're exporting people, we're exporting, manufacturing. We would like to be the Zetwork of India and maybe Zetwork of the world. Yeah.
Great. On that note, thank you so much, Amrit. Thank you so much, everyone.
Thank you, Bhavya and Amrit, for that superb session. Now, we're sure all those amazing conversations have really whetted your appetite. Some of you are already standing up to go get lunch. So we are going to indeed break for lunch here. But please be back in 30 minutes for more power-packed sessions that we have lined up ahead. So 30 minutes, by the watch. We'll see you on the other side.
Welcome to Money Control, your ultimate destination in the ever-evolving world of finance, business, markets, policy and technology. India's preeminent news platform, driven by facts and fueled by data. A platform made in India, for India and for the world. Moneycontrol.com has a staggering reach of 95 million monthly active users and 5.5 million daily active users. Being a transformative digital force, reshaping how we engage with money, markets, and news. Setting us apart is our commitment to delivering accurate information and empowering financial decision-making in a dynamic ecosystem. Seeking a deeper dive into the financial realm, we present Money Control Pro, a powerhouse of exclusive insights, providing actionable investment ideas and expert analysis. Because in today's fast-paced world, informed decisions demand both information and expertise. And we have 8.1 lakhs Money Control Pro total paid subscribers and 100% return in 1.5 years, beating the market. Explore market trends, access expert opinions, and utilize essential financial tools all at your fingertips. Join the millions who trust Moneycontrol.com for their financial journey, where facts meet finance and data drives decisions. Think markets, think Money Control.
As the startup ecosystem resets and opens up for newer opportunities, titans of the sector and investors are coming together to inspire, to guide, and decode the strategies that will cultivate the path forward. And the Money Control Startup Conclave. Persist, reset, rebuild.
अरे ये करके क्या होगा?
फ्लेक्सिबिलिटी बढ़ेगी।
फ्लेक्सिबिलिटी के साथ क्या करोगे? जिम्नास्टिक्स।
अरे ये फ्लेक्सिबिलिटी बड़े काम की चीज है, जैसे हमारा ब्रावो फीचर, ये करंट अकाउंट को दे फ्लेक्सिबिलिटी।
ब्रावो क्या है वो?
ये अगर आपके एक्स्ट्रा फंड है तो सीधा फिक्स डिपॉजिट में कन्वर्ट कर देता है।
और अब आप बोलेंगे कि इस पे अच्छा इंटरेस्ट भी मिलता है।
हाँ बिल्कुल बोलेंगे। और ये इतना मुश्किल नहीं है।
मुश्किल ही नहीं, ये तो मुझे नामुमकिन लग रहा है।
अरे भाई साहब, नामुमकिन था आपके बेल बॉटम के जमाने में, अब मिलता है।
सच?
और इतना ही नहीं, अगर आप अपना फिक्स डिपॉजिट तोड़ते हैं तो पेनल्टी भी लगती है।
करंट अकाउंट हो तो IDFC फर्स्ट बैंक जैसा हो, वरना ना हो। सॉरी।
IDFC फर्स्ट बैंक में करंट अकाउंट होगा
तो मोर मिलेगा।
हाँ। ये हमको नथुलाल बना दिया ना, घर चलो दिखाता हूँ तुमको।
India's startup ecosystem is emerging from a funding winter. Top entrepreneurs and the biggest VCs will come together.
for the second edition of Moneycontrol Startup Conclave.
The power of translating ideas into jobs.
Decode game-changing strategies
DPI definition is evolving.
that'll reshape the startup landscape. Moneycontrol Startup Conclave. Persist, reset, rebuild.
After 2 years of a harsh funding winter, things are looking up for India startups again. Improved profitability, a buzzing secondary market, and a string of tech IPOs have put the spring back in the step. But what does it take to persist, reset, and rebuild in good and bad times? How can you thrive in an AI-first world? Get a chance to meet and learn from innovators, disruptors, and change makers. Hear it straight from India's top unicorns, investors, and technologists. The biggest startup event of the year.
From inception to becoming the leading online gaming company in India, the single biggest force behind our success has been our core operating ethos, the science of gaming.
It's actually very simple and therefore very effective.
But what is the scientific way of running a gaming business?
First, a high level of objectivity and a deep respect for what data says.
Value your own beliefs, but be ready to abandon those beliefs in the face of data.
Secondly, something we refer to as why centricity, which is a constant appetite to ask why.
We ask why when we fail as well as when we succeed, because learning is the only way to keep building on top of what we already have.
And how will we succeed if we don't have well-defined goals? This is what we refer to as goal centricity.
With clear goals in front of us, we keep on innovating and pushing boundaries to come up with creative solutions to achieve those goals.
And who are we doing all of this for? Our players, of course.
We observe, we live, and we breathe our users. We see the world through our users' eyes, and the data they give us guides us on our scientific path. We call this user centricity.
We have and we will continue to invest heavily to build capabilities in automation and intelligence.
And these capabilities reflect in everything that we do, be it marketing, product innovation, or customer service.
But all of this is meaningless unless you have the right team. Amazing companies are built by amazing teams.
Not by amazing amounts of capital, not by amazing ideas, not even by amazing individuals.
And we're very proud to be part of this team. The team that embraces the core philosophy of the science of gaming.
A team that experiments fearlessly and without prejudice.
We are.
We are
We are
the science of gaming. We are Games 24/7.
on stage the host of guests. We have first Pixel CEO Awais Ahmed, PSI CEO Gaurav Seth, and Anirudh Sharma, the CEO of Digantra. Guys, please welcome on stage. Ahik, would you like to set the agenda, set the tone of this session?
Sure. So, if you have been following the space sector the last couple of years, what's been happening is that the Indian government has taken several policy interventions to open up the space sector for private entities. We had the Indian space policy in 2023. Then the FDI norms in space sector was subsequently eased up. And as a result, we have a host of space tech startups from offering solutions in launch services. Then we have Digantra, PSI, Pixel, who all work on satellite applications. And recently, during the budget, the Finance Minister Nirmala Sitharaman announced a VC fund of rupees 1,000 crore for the space sector. I want to open up with Anirudh. Rupees 1,000 crore sounds like a lot, obviously, but considering that there will be lots of space tech startups, assuming that will be coming in the next few years, and also that deep tech generally has been a very capital-intensive ecosystem in general. Do you think that rupees 1,000 crore is enough?
First of all, thank you for having me here. I am Anirudh Sharma, one of the co-founders and CEO of Digantra. At Digantra, we work on a specialized field in the space sector called space domain awareness or space situational awareness. We work on tracking satellites and understanding everything that happens in space. It's more of building an infrastructure layer. Now, to answer your question, 1,000 crore seems quite a lot for somebody who's not from this sector. Definitely 1,000 crore seems a really big number. But for somebody doing deep tech, be it space tech or any other industry within the deep tech sector, it's not enough, but I would say it's still a very significant step that the government has taken to show commitment towards sunrise sectors like space tech. So I would say it was one of the good decisions that they've made where they've announced something which we didn't have before. So that first step was very essential for the growth of this sector. And I think this will definitely attract more investments. But just to add on to a couple more points, when we see the other sectors or let's say the other markets like the US, China, this is not at all comparable. It's I would say very modest. So to begin with, I would say it's a good positive step.
So what would be a better number for you?
Even 10,000 crore is not enough for the sector because that's how.
Can I do some wordplay and say sky is the limit?
Yeah.
Is it?
Sky is even not the limit for this sector. We need so much funds. It's very much capital intensive, I would say.
Awais, coming to you, would you like to weigh in on that, and what is your take on this?
Sure, yeah, thanks for having me as well. Hey folks, I'm Awais, founder and CEO at Pixel Space Technologies. We also build satellites, but different kinds of satellites. We put cameras on these satellite buses, we put them up there, and you can think of us as big glorified photographers of the earth. We don't take images of your backyard, we take images of farms and forests and so on and so forth. In terms of the 1,000 crore VC fund, I think it's a great start, right? I think we have to be cognizant of the fact that since the privatization of space or the liberalization of space was announced, it's been barely 4 years since that was announced, one. And second, the amount of startups that have also started, probably most of them really kick-started their operations in 2017, 2018, 2019 in the case of Pixel, and so on. And so you can think of the 1,000 crore fund as probably the seed fund for this sector. It's like even if you see $5 million for an early stage startup, for which I believe most of us didn't have the opportunity to go out 3 years or 4 years or 5 years ago when we started, That's great. You can fund 20 companies with 5 million, which will at least make sure that these startups don't die in the valley of death before they're even able to prove the prototype with some things. Of course, not possible if you're building rockets, because they require 20 million to even build and launch one at least, on if you're being optimistic. But it needs to be followed up with, I would say, growth stage equity. If you look at Finland, for example, right, a country that you would sort of never think would operate in space, they've invested probably more than $200 million in their satellite company called ISI, right? And this is Finland there. US obviously is at a different playing level of the amount of capital that flows in. Japan funds it quite a bit. China has obviously funded so many startups. So I would say great start, absolutely no complaints there given the stage we are at. But as the sector grows, I would say, yeah, we would probably need a 10,000 crore growth fund at some point, and also as to back the winners and double down on the winners.
If we talk about government support and policy, etc., the economic survey, the recent one, also flagged challenges that the space economy is facing right now. And there are a host of things, actually: competitive marketplace, pricing constraints, limited demand, lack of visibility of long-term demand. So what are space tech startups doing to address these kind of challenges?
I think we're just figuring it out, right? No one has an answer. If you look at, being very frank about the space sector, if you've seen it globally, at least the first few years are predominantly anchored by the government being a customer. More than half of the entire revenue that flows into the space sector is probably just the US government alone. Right? So if you look at SpaceX, if you look at Planet Labs, if you look at sort of anyone else, and Northrop and Lockheed, where is their revenue coming from in the space sector? It's the US government. If you look at Europe, it's the European Space Agency. If you look at Australia, it's the Australian Space Agency, JAXA in Japan. So I would say the challenge does exist to take it beyond selling to the government, and how do you get it to other enterprises and eventually to people. There are a lot of use cases that we generally don't think are space related, but they are basically so ubiquitous that we can't live without them. Weather, for example, we know when it's going to be rainy or cloudy or sunny. It's possible only through weather satellites. It's just that it has been government subsidized for a long level and government funded. Or GPS and maps that we use. It's not possible without the GPS satellites that the US launched and sort of open sourced it for free. It cost hundreds of billions of dollars to sort of put it up there. But that's what we are all trying to do here. Either we sell to other space companies and build up an ecosystem, or in the case of companies like us selling data, we go to agri companies, oil and gas companies and others. And especially as sustainability and environment and climate becomes a more pressing factor and problem to solve for us, I think that's where having eyes in space that can help look at it from a global standpoint, where this becomes a data set that people can't debate, is it true or not, because you're seeing an actual image of what's happening down there. That's what needs to happen. So the challenges are there, but like in any other business, we just have to figure out ways to make money and make more money than you're spending.
But apart from whatever the government has enlisted in the economic survey, what, as an industry insider, do you think is a key challenge right now that you all need to collectively, as an ecosystem, should address or need to address?
Two things. Availability of funding to put stuff up there in space or build something. And number two is revenue once something is put up, to make sure that there's revenues to keep the sustainable business operations going. In both cases, the government will have to play a key initial part, but they can't continue to do that forever. It's only probably in the first 2, 3, 4 years of operations. The 1,000 crore seed fund is great. You put in some money, make sure the company doesn't die, they build a product. And then the government has to become an anchor customer in the beginning stages when other companies might not be willing to take a risk on something. We are providing a new type of data set, but how do the customers know that it's going to be good? The government comes in there and says, okay, it might not be good, but let us take a risk. And then when other companies see that, oh, this is actually happening here, and then they'll start doing that. That's how the ecosystem builds.
Okay, coming to you, Gaurav, you were an engineer in Indian Space Research Organization for 9 years. Not just you, we have other startups like a Skyroot Aerospace or an Ethereal X, whose co-founders and CEOs are also from ISRO alumni, right? So one way to see is that ISRO obviously has a great pool of talent, right? But the flip side also is that ISRO is losing talent, right? So folks like you who've gone out to make your own venture or other opportunities. So what do you have to say for that?
So first of all, hi everyone. I'm Gaurav Seth, CEO of PeerSight. We build synthetic aperture radars for Earth observation. So these are essentially like cameras with a spotlight, so we can image during the nights through the clouds. Now coming towards your question, if you think about it, ISRO can hire like a few hundred people per year. But startups like us who have started this thing now are providing job opportunities such core job opportunities to few hundreds and thousands of more people, right? So we should look at it from that point of view, that few talent is going out of ISRO to the industry, but it's also having this chain effect where we are hiring more and more people and giving more opportunities for Indians to, right now we have people in our company who have shifted back from abroad and are working in India. So they were always looking for those opportunities, but there were only few opportunities in ISRO so far.
Let me round up the question for you a little better.
Yeah.
If all the young, talented ISRO folks are exiting to make their own venture, what is going to happen to ISRO in the next 10 years or something?
I mean, there's no dearth of talent. I mean, in any given point of time, if you see ISRO applies for, one open post, there are few thousands or lakhs of people who apply for it. And, it would be very rare that people go out and venture. So coming back to your previous question, actually, the 1,000 crore fund, think about it as a seed, hundreds of seeds which are planted. Like, first time when someone offered me 1 crore rupees of check, it was enough for me to quit my job and start a startup. So many such seeds can be planted using this fund. And, we can see a lot of good outcome coming out of it.
Even the ISRO chairman had said something on these lines, that we don't have enough internal demand for applications derived from satellite technology. So my question is to all three of you, because your solutions have major applications in defense. Firstly, do you have good demand coming in from this segment? Is that enough? Are you looking at other segments? If you could, one by one, give us a sense of how the demand is shaping up in this space.
So in Digantra's case, it's a bit unique because we specialize on tracking what's happening in space. So we cater specifically to the space sector and defense sector. Anybody who is doing anything in space, they are our customers. So the demand comes mostly from the governments and defense sectors for us, which we've seen happening from the most international government agencies right now. But in India, I would say this topic is very new. We didn't have anything around space situational awareness as such. And again, globally, this came into existence since 2018 when private companies started working towards building infra for space situational awareness. Before that, it was more of a military and a government thing. So I would say that government has to be the anchor customer for a solution like ours, and that has been the case so far. So we are working with multiple governments today, supplying data sets on what's happening in space, and geopolitically, it's kind of helping us out today because you've seen a lot of wars happening, and most of these wars have some or the other way linked to space, or space assets have a role to play in these wars. And we've seen that happening with Russia and Ukraine, where we've seen a lot of commercial satellites being used to monitor Ukraine as well. So, which means that the demand is there today mostly because of how the geopolitics is playing out. And going forward, I would say that think about this sector as an aviation sector. When we started aviation, we didn't have an infrastructure, so to say, to track aircrafts. Today you have sophisticated infrastructure to know what's happening in airspace. Similarly, as space companies grow and we start launching more and more satellites, just to give you some numbers, in the year 2022, we had around 3,000 satellites. 24, we have 12,000 satellites. So the number of commercial satellite itself that is growing is massive. And this will drive the demand for services like ours. So I would say, this 1,000 crore seed funding also will eventually help us create an economy internally, because there'll be more space companies, more space players launching more and more assets, and they'll be our customers. And that's why I see this growing.
Gaurav, all three of you have major applications in defense, but is the demand enough, or will you collectively, or as an industry, also be focusing on other sub-segments as well?
Yeah, so first of all, my take on it is that demand is not only in the defense sector. There is a very high demand in commercial sector as well. However, the difference is that defense and strategic sectors do forward investment. For a commercial sector, they need the capacity to be up there, while defense will handhold you to put the capacity up there, right? So eventually, once the capacity is going up, we will see the more and more revenue coming out of commercial applications. But yeah, initial hand-holding has to be, or it's better if it is done through these strategic sectors or the national demands.
How about you?
Yeah, I think, look, the need from the private sector is there. The demand also from the private sector is there, but globally, the demand needs to be brought up in India, right? And that is due to a variety of different factors. Let's take, for example, agriculture. We work with quite a few big seed fertilizer companies in Europe and in the US. They are already customers, right? But in India, we don't have any such seed or fertilizer companies that are willing to pay that amount of money due to a variety of reasons. One being not enough education. They haven't really been offered that, look, here's satellite data. Here's what it can help you see. Here's what it can help you save. So what is the return on investment on that? So one, we need to do a little bit of education in the sector for these companies. And second, it's a price sensitive geography. You might be willing to pay for satellite data for a few dollars per acre in the US and in Europe because, you know, the GDP per capita and the spending power is much higher. It's not the case in India. So one, we have to bring the price down, which we are trying to do. And second, as things get more affluent in the years and decades to come, that will also increase in the country. So it's not a question of is there a need for it? There is. The demand needs to be brought up and it's coming up gradually. For example, let's take Rio Tinto. We work with Rio Tinto for helping make their mining operations more sustainable. There's not dearth of mining companies in India, but not a single one of them has purchased satellite data, whereas Rio Tinto has been doing that for the past 10, 15 years. The use cases are the same. The return on investment is the same. They'll actually get to see what minerals are present where. So I would say what needs to be done is education, and second, as the affluence and the paying capacity grows in the country, that will also grow. What we do as a company today is we look at it as a global venture. You know, space by default is global. Once you put satellites up there, you don't see national boundaries. And 95% of the customers and contracts we have signed are actually from the commercial sector in our case, not the government. Right, the 5% comes from the government, it helps, but it's really the commercial sector in our case that's sort of taking. So yeah, there is a demand and a need, but in India specifically, it's a new and nascent ecosystem, so hopefully in the next 5 years it will change.
Okay, so, you know, Anirudh, you have launched a satellite as of now. Avis, you have launched a couple of satellites. Gaurav, there's a plan to launch a constellation of 30 satellites, right? But again, Avis, you have plans to launch 6 satellites, right? But again, these things take time, and deep tech generally has a longer gestation period, right? So when do you see yourself fully being operational, and when you do, what kind of returns are you expecting in terms of like, how does where are your investors in terms of the waiting period and everything? If you could weigh in on that. I would like if you could keep it a little brief. I think we are running short of time. So yeah, Anirudh.
So what I would say is, definitely there is a return on investment in this sector. Like I said, this is one of the growing sectors, and everything that we do today are some or the other way dependent on satellite activities. So that's one thing that we need to remember. But the other thing about where and when would this revenues come in our case, what we're doing is we have segregated our infra stack with a software stack. We're also building infra, which means capacity to get data. At the same time, we have data analytics platform, which we can right now use and sell our services to government agencies and commercial companies. And that's something that we're using right now to be able to generate some revenue. While the full capacity and full-fledged infra play will only happen when we have all of our satellites beaming down data, and then we supply through our platform. So for meanwhile, what we are doing is we are commercializing the entire value chain that we are developing internally at Digantra. That's one way to see on ROI for short term, I would say.
Okay. Gaurav?
So unlike, OneWeb or Starlink, Earth observation, we don't need the complete satellite constellation to be up there to start making money. We can make money from the first satellite itself. Only thing which will change with the constellation is that revisit and coverage will only improve. So, our take is that right now to survey the waters, compared to, launching helicopters or speedboats, satellite is the most optimized way. And this revenue can be displaced right from the first satellite itself.
I mean, it's a different kind of risk profile. Not every investor will sort of look at it and say, we will make money. It's also, VC is all about power law, but in space it's even more of a power law. You'll only have very few bumper returns. Most companies will sort of not make it to that venture scale businesses. Sadly, it's the kind of business there is. Even SpaceX needed $300 million to even get their first rocket up successfully, and then they got $1 billion contract from NASA, and then it took off, right? The origins of venture capital itself were in the Silicon Valley when chips were being built, when it required tens of millions, which is like equivalent to hundreds of millions today. That's kind of the risk profile here. So it takes 4 or 5 years sometimes to actually get to the point where the technology risk is zero, and then you can start commercializing it. But the returns are also much quicker. We are not, it's not like a hockey, stick shape where you need to gradually increase revenue like in software companies. It's almost zero until you put something up there, and it suddenly sort of skyrockets once you have that. So when people can get comfortable with it and know that you have to, back winners and there will only be a few, I think it's different, but it works.
Guys, clearly time is up, but before we leave and wrap up this conversation, one quick word on by when we can see India's first space tech unicorn. Do some crystal ball gazing for us, and in one word, if the three of you all, predict something for us.
And make your case for, if you can make your case for being...
Make my case, okay. So I would say we will see that in like next 1 year or so. Because we're already growing.
So by next Moneycontrol Startup Conclave, we will hopefully have a space space tech unicorn.
Yes.
What about you, Gaurav?
I think it'll be 3 to 5 years.
Why? I know time's up, but why?
I mean, as we were discussing, it has some gestation period. For unicorn, usually you need sort of 100 million revenue ARR. So my prediction is it would be next 3 to 5 years. We'll see one of the 3 companies here make it up there.
Aves, you have a median figure between 5 and 1.
I think so. I think 2026. Not the money, not the startup conclave next year, but the one after that, and hopefully we will be there as well, given where we are with revenues coming in as well. So let's see.
All right. Thank you so much then. Thank you so much for joining us, gentlemen. Thanks, Ahik. Great co-hosting the panel with you.
Welcome.
All right, after this spectacular space tech session, now let's understand how tech has changed our workspaces, with co-working spaces being the new cool. Our next session is on the modern workplace and how next-gen offices are shaping up. I request Chandra Shrikant to come back on stage to take this conversation ahead. And joining her on stage is Rishi Das, co-founder IndieCube, a co-working space venture founded nearly a decade ago right here in Bengaluru. Over to you, Chandra. Hey everyone, good afternoon. Welcome to Moneycontrol Startup Conclave. Rishi, we've had some amazing sessions since morning, and now we also have a prediction on a space tech unicorn. So we'll hold Awais Ahmed and the others to that.
Absolutely, that was fabulous to hear.
Right. I'm sure many of you have seen, IndieCube offices all around Bangalore, so I don't need to introduce Rishi and the fact that he founded this venture a decade ago. But I have to ask you first, do you work from office or do you work from home?
I certainly work from office 5 days a week.
Five days a week?
Absolutely.
But tell us about how work from office has evolved post-pandemic. Because, we've noticed there's this constant tug of war. And tech CEOs I speak to say it's easier to bring employees to work in Mumbai or Delhi compared to Bangalore. Do you observe a similar pattern?
So you are so right on that, Chandra, that there is a tug of war. The employers want people to come to office. Employees don't want to come to office.
Okay, one second. How many of you work from office? Oh my God. Okay, this is a good number. How many of you work from home? How many of you want to work from home? Okay. How many of you want to work from office thrice a week?
Yes.
Okay, that's an interesting...
Yes. So I think the last one answered where we are headed. So what is happening is that, see, this whole question post-COVID that who, when, where, how is a very pertinent question. And people say it's a question to be handled by the admin of the companies. I say it's a HR question. Nobody has still figured out very clearly that who will come to office, when they will come to office, where they will come to office, how they will come to office. Is still an evolving question that we see is there today. But by and large, what has happened is where things are settling down is 3 days a week is what we are finding. And the office is the platform where companies are looking at managing their work. So it's an office-based environment, and with work from home being the perk. And also we are finding that different companies, different functions within companies. So I think this COVID, post-COVID, work from home, hybrid has led to a lot of, I will say, you can call it a fragmentation of the culture in companies. Today, a finance team may be required to come 5 days a week because they have a lot of documents to handle. Most of the companies' technology team is the God gives to mankind, which typically doesn't show up even once a week. So which was not the case earlier. So within the same company, sitting on the same floor, you see different teams behaving differently and different cultures also coming up. But net, I think office is here to stay. That's how we see it here.
Oh, wow. I was hoping you would say hybrid is here to stay, but you're saying office is here to stay.
Hybrid, you're so right on that. It's hybrid, and again, it varies from industry and function. Yeah.
Right. The other thing I wanted to understand from you, Rishi, is, when we look at the patterns on owned facilities versus leased, for instance, Cognizant said last year that it's going to give up all of its owned campuses, and they have done that in Tamil Nadu to a big extent. And startups, on the other hand, are also in a cost-cutting mode. So they are giving up own spaces. They're trying to work out of co-working spaces to save on costs because profitability has become very important to them. Now, you service both these cohorts. You service the large tech companies and you service the likes of Myntra, Unacademy, and so on. How has this impacted, the demand trends that you are seeing? Has it been good for you because people want flexibility? Or, what patterns are you seeing in terms of demand?
So, see, the office spaces post-COVID have gone a massive disruption. Like, see, if you look at somebody like me who came 25 years back to Bangalore, so we went 2,000 miles where work was. Today, work is going where people are. So I think that is a big shift. And what it has led to a lot of intra-city offices. For example, if you have an office in Electronic City, you can't expect somebody living in Hebbal to any longer come and work for you. People will not commute more than typically an hour. So intra-city, intercity. And when we talk about intercity, we are not talking only on tier 1s, the emergence of tier 2s. At least there are 15 tier 2 cities, mostly the state capitals, which are looking very, very promising from that perspective. So I think that is which is happening. Now, if you look at different segments, before COVID, managed office was mostly, I will say, a startup phenomena. Typically, we were catering to companies who were looking at 100 seats, 200 seats kind of clients, and mostly late-stage venture-funded companies or unicorns, some of them you named. But what we are seeing post-COVID, a lot of Indian companies are picking up spaces. A company like Air India is our customer, and a large customer in Chennai.
Which one?
Air India.
Okay.
Now, Air India, you can imagine the average age of people in Air India is 50 to 53 years.
Wow.
So even those kind of companies, or you look at company like Mahindra Logistics, Ultratech Cement. So that is a massive addition that has happened. And if you look at a lot of mid-cap IT companies, take the example of a company
Persistent,
like
Mindtree.
Mindtree kind of, you see those companies were not present in many cities. TCS, Infosys, Wipro, the big five were pretty much present.
When will the competition go there? Are they large enough? And then you start operating in a particular place where how we think about before going to any segment really is that what insights do we have? What do we know that is just unique to us? Most likely it's contrarian, it's opinionated. And second is, can we win that segment? And once we identify that, we really go after that segment and our best product for that particular user. So an outsider, we might feel like we are a video creation software, but what we are really serving is a niche segment where we are the best and we don't think competition will become great there. And then layer it from there on. And I personally believe that that is how most disruption really happens. So most disruption happens where a larger player thinks that, hey, this segment is not great, why are they going after that? And then you slowly layer it into becoming a giant. But every segment you went after were winnable and you had some differentiation there and you had some core insights. And I think that is why and how it will get built. But otherwise, we really run the risk of what you just asked and we'll take that 5% chance usually, right? Like I think world does belong to optimists on that end.
So find your differentiate. A discussion point around what would the consumers pay in India, right? Our users typically earn less than $10 a day. These are bottom of pyramid commercial vehicle drivers like a e-rickshaw or a gig worker. Some of them could be, say, Rapido drivers or working with Swiggy, Zomato, etc., right? And they pay almost 25 to 30% of what they earn to us on a daily basis. So your value proposition has to be strong enough for them to really see that this is either adding more to their bottom line or easing their life, right? Which we are trying to do both the things. We are making EVs more affordable. They can buy a scooter for half the cost without a battery. And we are essentially eliminating any downtime of charging. And they can really run more than 100 kilometers a day if they want to.
Perfect.
Wow. I love this plan. It's full of numbers, 2 lakh on your waiting list itself. Wow, that's big. Right. Pulkit, just a small follow-up on that. We seem to have cracked the code for the EVs, right? I mean, we have a lot of manufacturers and they are going big, scaling up. But what team?
Or perplexity. Either one. You can choose.
No, Sora team, release fast.
Pulkit, you spoke about covering the NCR belt, right? What is that one thing that Gurugram or Gurgaon has that Bangalore doesn't? What's keeping you there and not making you
more IPOs?
Oh, wow. There's one that went live today. Pawan's a big fan, I'm guessing.
On that note, time's also up. Thank you so much. This was a great session. Thanks a lot.
Thank you, guys.
Thank you.
Thank you so much, everyone. That was a delightful and power-packed panel.
Things, right? The second thing is you got to be careful on acquisitions. What acquisitions you make, and are those acquisitions leading to a coherence in your business model, or is it distracting you in your business model? I think that's the second big thing. I think the third big lesson in my mind is don't market ahead of your product, right? I think all these three are important lessons.
But even on M&A, I mean, I'm sure someone advised them not to do it, but did they listen to them? I think that's the question.
He's
they
right.
don't want to
I mean,
listen.
At some point, they would have got enough
No
advice.
point advising if the founder doesn't listen.
No, but there again, I'll be very honest. We all sit on boards. When new rounds are happening, new valuations are happening, nobody questions anything in these board meetings.
Right, time's up, but Bodhi has one short question.
No, I just wanted to ask, if you take China, which has also an enormous, much bigger than India, startup technology ecosystem, it is heavily state-directed.
Chandra, please welcome aboard with Samir for that engaging session. We're all looking forward to it.
Hey guys, so how many of you use PhonePe? You don't have any people to convert only.
It's about just less than 50%.
Sorry? How many of you use PhonePe, UPI Lite on PhonePe? See, now you have work to do. So, in the introduction she said the quip often is how many licenses does PhonePe have? Like how we add, tomato, coriander to cart on Zepto or Swiggy. You add licenses to cart. So how many do you have now?
Way less than you'd imagine. So we don't have any financial manufacturing product licenses.
Are you applying for one?
No. We're not a bank, we're not an NBFC, we're not an insurance company, we're not an AMC.
Okay, so these things you will apply for eventually?
No, it's actually going the other way. What's happening is within payments, different parts of the payments market is getting regulated. And when it gets regulated, like bill payments, companies like BillDesk have been around for 20-some years. 18 years into their journey, the regulator says, the Bharat Bill Pay system is now coming up, you need a license. 20 years into their journey, they say you need a payment aggregator license. So some of those licenses, we were in the business before it got regulated.
Right.
So we have a payment aggregator license, or in principle, we have a bill payment license, OU license, but we are a distributor. We have a wallet PPI license. So just like that, in insurance, now you need a license if you want to work with more than 3 insurers as a distributor. So it's called insurance broking license, stock broking license, mutual fund AMFI. So these are all in the nature of distribution. Let me dispel that myth. We don't go around collecting toys like that. If it's in the nature of what we do,
People are envious of you, Sameer.
I'm not. I'd love to meet people who think having a battery of licenses and 60 odd audits a year is fun.
Right. Sameer, if I look at how PhonePe has evolved, right? I mean, you have a 50% share in UPI payments today, but that's not the only thing you're doing. You now are a house of apps. So you have PhonePe, which has, payments, bill payments, UPI, insurance, gold, and so on. Then you have Share Market, which is your entry into stock broking. And then you have PIN Code, where you are doing things on ONDC, which is your commerce play. I mean, did you ever think about, should I have everything on the same app, like a super app, like the way it is in China or Southeast Asia? How will PhonePe evolve? Will we see maybe 1 or 2 more apps in the coming years? Are you envisioning this as a house of apps?
So we discussed, and very early on, we decided that we're not going to try and build a super app. I think this idea of a super app, a lot of discussion around that in 2019, 2021. The only super app that I've seen globally that really works is WeChat, but their origins were different. They started with micropayments and gaming and chat, and everything else kind of got built around that. I don't think India will mirror that at all. I think in India, people want different apps for each category in their life. I think that we compartmentalize. So if it's food tech today, it's largely a Swiggy and a Zomato. If it's cabs, it'll be an Ola and an Uber and a Namayatri and so on. So I think that compartmentalization is pretty natural to us as Indians. So you got to play it on merit. That's one. Second, I just don't think we could, on PhonePe, our primary focus is to make sure we minimize the time it takes for you to make a payment and leave, right? Every app developer will tell you, I'm trying to build engagement. They want to show you video ads. They want to keep you there as long as possible. They want you to browse. They want you to actually see the merchandising. The average session on PhonePe is about 7 seconds, right? And I'm glad so many people here do use it. We strive to make sure that you open the app, you make the payment you came in for, and you leave. So we're not trying to upsell or cross-sell as a habit. So of all the categories we've entered, there are only 2 that we've kept on PhonePe, which are perfect adjacencies. One is personal loans, which we recently launched. The other was in insurance. Mutual funds, again, it's basically SIPs. The minute we got into IPOs and broking and stuff, it went to share market. Minute we talked about e-commerce, which is a much deeper engagement. You're searching for product, you're browsing product, you're comparing price. It had to go into a PIN code app. So all of these apps are connected only by one thing, which is the login using PhonePe, because we have tight risk and fraud checks, the KYC properly. That's about the only benefit. Otherwise, if you come to, if you come to the corporate office, all these companies are incubating in different buildings. As of last summer, we restructured the organization. There's a different CEO for each of these companies now. They're separate companies. So instead of thinking of a house of apps, we call ourselves the PhonePe group of companies.
Like a conglomerate.
Yeah,
like a modern
they're separate
version of a
P&Ls. Each of the CEOs and their teams present their AOPs separately to the board. First to Rahul and me, and then to the board.
But when you decide to list, it'll be the PhonePe group. It will not be
Yeah.
a phone.
So these are all subsidiary businesses. Share market, PIN code, Indus, lending, insurance. I missed one.
When you have too many businesses, that
There's 6.
But coming to profitability, Sameer, I remember last year at our conclave, you mentioned that NPCI earns more profits than all other payment companies combined. Payment companies, I think, make, 3 to 4 bips for every UPI transaction. So does that cover all your expenses, including, the investments you made at scale?
Yes. And it has been a long year since, so I should probably give NPCI a shout out here. I think what they have managed to do for the industry, which has gone unnoticed, is I think they've managed to convince the government to increase the subsidy substantially last year. So last year the government's actually paid almost about 4,000 crores, 38 to 4,000 crores in subsidy, which has actually lifted a lot of the payment companies close to profitability or to profitability. So I'm glad you asked that question. At a consolidated level, we are actually close at a console level. All our bets in, we are actually close to profitability. Our audited financials will be released very, very soon, so you'll know. I'm not going to burst my IR team's bubble, I promise them, but we're not far.
So FY24 numbers are not yet out, right?
Our numbers are audited, approved by our board. We will publish them soon.
So when those numbers come out, you will be profitable at a?
Nearly profitable at a consolidated level.
Okay. So those are audited numbers.
They're nearly public.
Okay. The other thing, Samir, that I wanted to ask you, you've been expanding your monetization avenues over the last few years. Insurance, lending, payment aggregator, SIPs, and even direct equity trading through share market. So how are these helping you in terms of your bottom line?
So each one has a different sort of gestation curve. The standalone apps, like share market and pin code, you have to actually invest in branding them, marketing them. Lending, luckily you can't give cashback in either lending or insurance. I love categories in financial services. You don't have to do silly stuff. So those are margin positive to begin with, and because we are distributing them on PhonePe, it just flows through. So those help. Payment gateway, our merchant business. So I mean, we've talked about the fact that we have almost about 40 million odd merchants in the country, but in the last 2.5, 3 years, I think we've deployed about 6.5, 7 million smart speakers. We entered the EDC market last year, so we started actually licensing or leasing the POS devices for cards. So there's a lot happening in the ecosystem. There's a lot of value-added services where we're able to charge. So the monetization focus is well and truly on for the last several years now.
Right. This year has also been a tough year in terms of regulation. If you look at, what happened with RBI and Paytm Payments Bank, even today, the one thing that fintechs fear is, some circular from RBI that can throw them off balance. And in your case, I think you will have to answer to RBI, SEBI, and IRDAI, right? Because you have an insurance broking license as well. So how are you kind of managing all these different regulators?
Happy to report, we just got our insurance broking license renewed, so that's a multi-year renewal. Every time we get something renewed or extended, I get happy. I think the way to look at this is, if you've chosen to be in a financial service sector, you should go in assuming that regulation is either already there or it is going to follow. I think the fool's paradise is hoping that the regulator will never come into your sector. If that's what you think is going to happen with you, it means your sector is never relevant enough.
Wow.
You're talking about people's money. If nobody is regulating what you do, nobody cares about what you do. So we assume any part. I will not be surprised. I think the only thing remaining in payments that's not regulated today after all these years, I think, is the UPI TPAP. That's about the only one that's not directly regulated. In the last couple of years, everything's got regulated. There's been a flurry of activity. I think people assume it's because of what went down in Feb-March. But there was just a backlog of things that needed to get formalized, right? And personally, I actually welcome it, because while the process involves churn and rules change, what you get on the other side is a much more formalized set of rules, accepted best practices, accepted business models. Delegate got announced yesterday. How many of us want to have our kids or our parents or our staff be able to go scan any QR code, but we control the payment?
Right.
It's been lingering for a while. And now that the regulator said, yes, we agree with this model, India very, very soon will be the first market where you're saying, by regulation, I am allowing you to delegate your payment activity to somebody else. It's phenomenal. So I think they're not getting enough credit for having allowed hypergrowth to continue this long while keeping the markets protected. I can't think of another market where there's that much innovation. China comes close to mind. In the US, there's been no innovation on payments for God knows how many years. And in China, you have issues on governance that come later. Here, the governance is happening in lockstep. It's fine.
Right. Coming to, share market, this was something that you launched recently. Are you happy with the traction you've seen so far? Because this is such an intensely competitive space. We had Lalit Keshri of Groww in the morning, and they overtook Zerodha, I think, a month ago, huge milestone. And this is also a space, where there is this paradox. On the one hand, you're seeing a lot of retail participation. On the other hand, people are uncomfortable with that level of, retail participation. We've heard SEBI, government, everyone talk about the heightened F&O activity. How do you see this panning out for you?
See, banks are complaining that the deposits are down. Government's been telling all of us to invest in mutual funds. Mutual funds are here. So now the middle class is saying, let's go towards mutual funds. So the banks are complaining. That just is logical progression. Saving not equal to investment, right? Those are the ads. Now, if you get to the mutual funds and the SIPs, you start understanding, okay, if I have a portfolio, that might actually make more money. But then somebody comes along and says, here's a nifty index. But you can trade on it on a weekly basis. So, listen.
The minister's here. Yeah.
Hello.
You were talking about tax.
Yeah, so I was saying that if SIPs become popular, FDs will become less popular. And similarly, if F&O trading, or particularly, let's not even say F&O or intraday, this is people trading on indexes mostly. And indexes are being offered by the exchanges. So I, for one, as a broker, will not pass judgment on where people should invest their money as long as these are all legal forms of investment, point number one. Now, taking a macro view and where I think the FM and others were coming in from, I think there is a stability concern where new to capital market investors start trading in instruments that they don't understand the underlying risk of. I think there is a genuine concern on that side. It's legal activity, but it's risky activity. And I think it needs to be tempered some. I also believe it needs to be tempered some.
You also think it needs to be tempered?
No question in my mind. And the reason I can say that is now we actually play in that market. And to answer your question, when PhonePe launched, within 2 months we had demonetization, and I saw a rocket ship. Share market launched last year. Earlier this year we started marketing it. I'm not seeing a rocket ship. I'm seeing an Elon rocket ship that's going to Mars right now. We are compounding on a weekly basis. I asked my team if I can share some numbers before I came in, since you always ask me for something. So here's a data point. We were doing less than 20,000 orders before launching F&O. As recently as April, we are doing over 600,000 orders a day.
Wow.
That's 30x compounding.
So where is all this money coming from? Is it smaller cities, top metros? Is there a pattern that you see?
It's coming from all over. SIP money is also coming from all over, but F&O money is also coming from all over. See, most of this money, people think that people are sitting there and trading on individual stocks. They're not. They are squaring off positions on these indexes, the index funds. So they are assuming somebody smarter than them is deciding where to put money every week. They're just saying, I'm along for the ride. And I'm seeing that volume compound at a very, very fast pace. So do I love it as a business? Yes. Do I think it's sustainable? I don't think so in the current model.
Right. Final minute, Sameer, I have to ask you also about PIN code, your other big bet. Now, you joined ONDC amidst a lot of fanfare, and then I think you exited all categories except food. So where do your plans stand in terms of commerce? And there's a lot of buzz around quick commerce as well. So what plans do you have around that?
So with ONDC, I think the gestation period is longer because what we realize is you have to solve what I call roti kapda and makan problems. You have to go in with the offline stores, first help them build rich digital catalogs. Because the commerce and quick commerce companies give you nice imagery, they give you crisp details, description, pricing. So first you have to actually solve the cataloging, which we've done in very large part. We launched a seller platform after launching PIN code. Then you have to actually get real-time inventory data and pricing data. That is still a bit of a challenge. We are solving for that. So the reason we took a bit of a break, I'll call it a detour from ONDC, not a divorce. We actually told them we want to go deeper into the grocery category, build all of the IP that's required to onboard all of these stores and modern trade centers. And once we've cracked the code on that, we will likely actually list those back on ONDC as supply. But right now we are building the whole org. That's ONDC. I forgot your other question.
No. In terms of quick commerce.
It's made walking outside my complex really, really hard. I don't let my kids get on the street anymore because I have 6 bikes going in 4 different directions any given minute. I mean, and I'll be honest, my wife is using them. My kids always forget to plan their day, so they want everything at the last minute. I see the benefit. I just don't know how you can have 6 or 7 dark stores in every neighborhood because everyone's entered. My main concern is 2 people could do really well. 8 dark stores in my neighborhood, I might as well have the regular guy just do the delivery. So I don't know.
Right.
Verdicts out there.
Right. I think that's going to increase because Zepto is also moving to Bangalore now. So more dark stores in every neighborhood. But before I let you go, Sameer, in the previous session, we had this debate between Prashant and Sanjay. Why are more tech IPOs happening from Delhi and not Bangalore? And Prashant said that, you will see more tech IPOs in Bangalore. Now, you're a company that's flipped back to India. So will you IPO soon, maybe, improve Bangalore's rankings in the tech IPO sweepstakes?
So we will definitely IPO. I mean, one of the major motivations for moving to India was that we want to list here. This is home country, this is our market, we will list here. We've also said that we will list once we are convinced that we are sustainably profitable. As far as the Delhi companies, most of the ones that have listed successfully are about 8 to 10 years older than a PhonePe. So I think you have to allow us a little bit of time. Not that much time. We will list soon. But I think the Bangalore ecosystem has a bunch of really exciting companies lining up for IPOs. And I think they're just earlier in their life cycle. That's the only difference. How many companies in Delhi have gone public? Paytm is late 90s, early 2000s, inception. Zomato's been around for 17, 18 years. Make My Trip's been around for 25 years. I mean, PhonePe's been around for 8.5. So...
Too much pressure. But on that note, Sameer, thank you very much for talking to us at the Moneycontrol Startup Conclave, and here's wishing you the best.
Thank you. Thanks, Andrea.
Thank you. Thank you, Sameer and Chandra, for that engaging session. That was an industry perspective. And now, let's move to the policy side of the discussion. There's lots happening in Bengaluru on the policy side. So please put your hands together for Mr. Priyank Kharge, Honorable Minister of Electronics, IT and BT, Rural Development and Panchayati Raj, Government of Karnataka for a keynote address. Sir, please come up on stage.
Elarigu namaskara. Good evening to all of you. I think somebody is playing the music just before I started speaking, but trust me, my speech is not that boring. I hope it will not be that boring. A warm good evening to all the wonderful ladies and gentlemen. It's a privilege to be here at Moneycontrol Startup Conclave 2024. An event that unites the brightest mind and the most innovative spirits within the startup ecosystem. So I'm here to speak on, I was asked to speak on what makes Karnataka a great ecosystem for startups. And I was just hearing Ms. Chandra speak. She was asking about some data on how PhonePe does things and how other startups do things. Well, I have a lot of data for you today. and why we are number one. So a lot of people think that Karnataka became an innovation ecosystem overnight. It did not happen like that. It has taken us more than 3 decades of hard work, more than 3 decades of planning, more than 3 decades of persistence and consistent policy making to reach where we are here. I mean, we have started right from our education system. If you take a look at our education landscape, we have close to around 234 engineering colleges. We have close to around 17 medical colleges. We have 44 universities, and we have close to around 1,777 public and private industrial training institutions. We
lay down proper financial norms, and if there are many failures of this kind, then there'll be external agencies will step in, regulators will step in. And that is the last thing you want in the startup movement. We've avoided that so far. But many more failures will lead to that cry for external, much closer regulation. And regulators must be kept at bay. When the startup movement was launched in India, we kept all regulators away from this. Prime Minister's desire that time was keep regulators away. So we actually eliminated factories law, labor laws, all that away from startups. So that's the number one challenge. And that's dependent on the startups. The number 2 challenge to my mind is that now India needs to grow on deep tech. So you need a lot of patient capital. The government has announced 1,000 crore for the space sector. But I really think that state government should step in many of these areas, not merely space.
So let me just push you a little bit on the space sector funding, because, for example, if you do a comparison with, say, the Chinese ecosystem, where Xi Jinping is being specific on the kind of sectors startups should focus on in terms of the larger national trajectory. So is space one of those sectors that we should look at very specifically, and how do you see that growing?
It's coming from foreign sources in the startup movement. So you're very dependent on foreign sources of funding. You need domestic sources. You need Indian pension funds. Regulators need to open it up. You need family business houses. You need large companies. Many of them who are now investing, but you need that movement to grow in a much bigger way. So Indian sources of funding, particularly large insurance companies and many of these petroleum companies, which are large navratnas, all should put resources into the startup movement of India. It's very, very important if you want disruption to take place in India.
That's a very important point you made, sir. So you also mentioned in your previous comment about EVs. Now, you've been one of the prime movers of the EV movement in this country. There was a lot expected in the budget around that, but we didn't see much of that. There have been, if you look at the government signals in the last, say, month, 2 months, there have been confusing signals, if I may put it that way. So how...
It's a war-like situation. India needs to retaliate, which India did very effectively, very powerfully. What the economic survey now has said is that in certain areas where India needs to technologically leapfrog, like component manufacturing, etc., we should look at doing joint ventures with China in those areas, much like China did with Taiwan, much like China did with Japan. And over a period of time, actually, you are able to build that capability and skills of component manufacturing so that you can do more value addition in India and then Indianize the process of manufacturing over a period of time. So you can do technological collaborations, you can do joint ventures, etc.
Our next session has some of the founders and investors who are the hardest to pin down. A freewheeling chat between the top bosses of SoftBank, Swiggy and Delhivery. I invite Chandra to take this chat ahead, and joining her on stage is Sumer Juneja, Head of India and EMEA SoftBank Investment Advisors. Sahil Barua, Co-founder and CEO Delhivery. Sri Harsha Majeti, Co-founder and Group CEO Swiggy. Welcome on board, guys, and Chandra, over to you.
somebody is going to build a very large logistics company in India, probably more than one, maybe probably 3 or 4. And I think public market investors expect that we will be one of the companies that will deliver that. So not really that different from the private markets at all.
Right. Harsha, confidential filing done. How are you preparing? You've expanded your board, hired
We expanded
everything.
our board about 18 months back,
Yeah.
Chandra. So I think we've been preparing to make the company ready. I think it's also been, that part is like a dry run to understand how everything works. So we've, even the compliance, the tech stuff that needed to get ready, the accounting stuff, all of that has been in the works for a while. So yeah, I think we are on our way. We're preparing to go for the final step.
When do you think it will happen? Is there a timeline you have in mind?
No, I can't comment on any timelines, unfortunately, but hopefully soon.
Right. And, Sumer, Sahil, both of them are on your board. What do they tell you about becoming a public listed company? What's the biggest thing you should watch out for? Or you don't have those kind of discussions?
Of course we have these kind of discussions. We have board meetings and then there are other meetings, so there's always these conversations. No, I think, had long chats with Sahil about his learnings, and Sumer has seen this also through his portfolio companies. No, I think I can't whittle it down to like any such specifics. I think as we go into the next stage, I think obviously performance is paramount. That is the most important thing. Then communicating your strategy transparently, being clear, communicating. Yeah, just communicating clearly is, I think, the next big learning for us. The rest, I don't know if anything should change. If you're focused on, long-term stakeholder value and long-term performance, that part needs to continue. And I think also we will have, when we go public, a much wider set of stakeholders than we've had. We would have like maybe 30, 40 investors, small, large, of all types today. But that will expand into thousands, hundreds of thousands, whatever. So I think listening in even more and understanding the parts that are constructive and making sure that we pick them up and act on it to make the business stronger is, I think, another big one that we've learned.
Right. Sumer, how has SoftBank's exit profile been for you compared to other markets? I mean, I think you've fully exited Zomato, PB Fintech, Paytm, Delhivery. Also, you've been offloading shares. Give us a sense of that.
No, so I think specifically for the fund, Vision Fund 1 was started in 2017. So I think when all the ducks align, and it's a good market for us to exit. It's also where we are in the company life cycle. But we obviously have to return, our funds to our LPs. And so we will exit when we think it's the right time. India has been honestly a phenomenal market for us. I was saying for the Vision Fund, in terms of exits and returns, India is probably right at the top. We've had not only obviously all the public market exits, we had Flipkart when Walmart came in, and also just directionally, if you see the up rounds in a lot of our private companies, I think we can say that the India portfolio is definitely one of the best we have in the Vision Fund.
Right. So if India is such a great market, why are you not investing more? I mean, the SoftBank funding winter has gone on. I'm trying to remember the last fresh investment. Don't tell me Meesho because that's a follow-on. So why does the SoftBank funding winter go on and on and on?
No, I don't think it's a SoftBank funding winter. I think if you see growth equity deals, look, for us, we're not going to do $10 million, $20 million checks. We might do, it has to be a real exception. But if you look at $50 million plus investments in tech, in AI first, tech first companies, I don't think there have been that many in the last 18 months.
So it's a supply issue.
I think it's a supply issue, and I think we go through cycles, and obviously, I think for us, the seed, Series A, Series B, which were done probably in 2015, 16, 17, which became relevant for us to invest in 2019, 2021. Swiggy, Delhivery, Policy Bazaar, maybe a little older, but Lenskart, Meesho, etc. And now I think the next cohort, which probably got funded in 2020, 21, they have to be ripe for us now coming. And I think that 2021 there was a hype, so I think the cohorts were large. Maybe the quality, the quality wasn't as good, and that's across the board everywhere in the world. And then you went through this massive kind of lull in 22, 23. So I think that will take a little bit of time to settle itself down. Also, I think a lot of companies, because they know that some have recalibrated, some still want a 21 valuation, and if they do, they're becoming profitable or they're conserving the cash, they're making the cash last longer, so they want to come to market later when they think either the company's grown into a valuation or the valuation environment is better. So we are looking very, very hard. That I can assure you. If you find us a good growth equity $50 million check, we will be very excited.
I heard you were looking very closely at the whole AI infra layer, you know, data centers.
Well,
and
I
so
think
on.
that's so I think you can kind of put it in two lenses. You have obviously, you know, we'll do like we did with Delhivery and Swiggy own 15-20% of companies. The infra is more strategic, which which is I think a longer term bet which we'll have to think about.
Right. Sahil and Harsha, I wanted to get your views on, the evolution of commerce in the last decade, right? What is your take on this whole debate that's going on quick commerce? Is it taking the share of premium kiranas, older kiranas, or modern retail, or e-commerce? Every founder we speak to has a different view. Harsha, maybe you have skin in the game, so you can start and Sahil can add to that.
Yeah, I think obviously we get this question asked a lot. I think if you first think about like who quick commerce serves right today, it is still at the overall category has acquired probably 30-40 million consumers at the top of the pyramid in India. And if you think about where these users were making their grocery purchases from, there may have been like a very occasional visit to the kirana, but the majority of the grocery purchases would still happen from either large format grocery stores that are modern trade or, for example, e-commerce. And even if you think about the debate, right, there are multiple things that are very different about, let's say, the quick commerce and let's say what even a kirana offers, right? For example, kirana is all about micro top-up and sachet kind of entry price SKUs, which you would not even find on a quick commerce platform. So those SKUs don't even exist. If you think about the segment as well, like I said, we are at the top of the pyramid, just working for the top 100, 150 million consumers kind of zip code, whereas the kirana is not exactly built for this. And I'll give you a few examples as well, right? A large part of our revenue, sales, everything comes from D2C brands, which are kind of not even existent in the kiranas. They haven't managed to penetrate. I mean, some of them struggle to even penetrate modern trade. So the kirana is not even there. So the offering is entirely different and is built for an audience with a selection that is completely different from what a kirana. The proposition is different, the consumer is different, so it cannot be taking share away from kiranas.
You're saying it's not a market share game, you're creating fresh demand.
See, there is some of that as well. Of course, if you think about, if you ask the folks at Red Bull, if you ask the folks at Quality Ice Cream, if you ask the folks at Coke, you will see that there is so much consumption that is happening incrementally because there are access points available that weren't available.
No,
some of the SKUs,
HUL's
like an
CEO, I think,
yogurt.
spoke about it yesterday, right? He said a lot of HUL's products like noodles and ice cream are sold more on quick commerce.
That's right, and there are some SKUs that are being prepared only for quick commerce to suit the audience that quick commerce is operating on. So I think it's a completely different channel, kind of purpose-built for the top part of the India's pyramid. So I think it's not exactly the same proposition, not built for the same consumer. That's my take on it.
So it won't take away, I don't know, share of DMart or...
Like I said, I think as you go higher, as you go into more large format modern trade stores, there would be some purchases that will have some overlap. But the specific question you asked was a kirana, which it is not.
Right. Sahil?
Yeah, I think it's hard to argue with that, right? It's a nuanced answer, which is essentially some categories are clearly incremental demand and there's new demand coming in, which hasn't been there in the past. But as quick commerce proceeds, I think the reality is that the supply chain is going to rearrange itself. And the reality is that it is going to impinge on traditional retail, whatever it is. It doesn't have to be just kiranas. It will be organized retail, for example, or modern retail, which also will be affected by quick commerce. I think we're some distance from that just yet. It's a narrow set of customers with a very specific value proposition, likely to be some amount of incremental demand. But I think as quick commerce grows, there will naturally be a rearrangement of the entire supply chain.
Right. You addressed some part of it, I think, last week where you introduced rapid delivery for D2C brands in, 3 to 4 hours. Is that the segment you will play in, not the 15 to 20 minutes dark store part?
Yeah, that's the segment. Ours is aimed less so at extremely high frequency orders like Swiggy has, for instance, or like a Blinkit would have, but more for e-commerce brands who also want to create a direct offering with their customers. So they could store at our dark stores across cities, and then we can do sort of up to an 8-kilometer or 10-kilometer kind of delivery on the... So think of it as faster same day. So that's essentially what the service is designed for. And then they can sell not just on quick commerce, but they can sell on their own channel. They can sell sort of directly to their customers or whatever they need to do. So it's a completely different offering from traditional quick commerce.
Do you see it replacing traditional e-commerce? Because, I don't know, they are expanding categories. Now you can order, I think, Hamleys from Instamart and iPhone from Blinkit and so on.
Yeah, it's kind of funny that we've reached the stage of calling it traditional e-commerce, no? About 10 years. Yeah, life comes at you fast. I think in some categories it's inevitable. The reality is that if you go to consumers, I've never heard a consumer say, it's the old Jeff Bezosism, right, which is consumers are never going to say they want things slower in reality. So I think for some categories where the supply chain can be architected to deliver faster, in some cities for certain categories, for certain kinds of products, this is an inevitable outcome. And it will certainly move away from classic sort of big box marketplace e-commerce towards this. But that's it, I've said this before, the vast majority of e-commerce as it evolves is long tail. And in India it's not just long tail, it's also long tail and low value. And that doesn't lend itself easily to this format of delivery.
Right. So has it surprised you in a sense, how this model is able to survive in India when it hasn't worked elsewhere in the world?
I think also...
But you also had advantage because I think Swiggy literally built Instamart.
And
Yeah.
Swiggy, and these guys were, obviously way ahead of the curve, the way they thought about it. Obviously now it's become a lot broader, SKUs, etc. But it was supposed to be what Harsha was saying, the top up. I think when we sat on the Swiggy board and we saw it, being through inception, I'm not actually that surprised because I think, at least for me, the journey of Swiggy started from 2015, and that itself surprised me like humongously, right? There was a product didn't exist. You went from 800 orders a day to 2 million plus or whatever the number is orders a day. You then added a delivery fee, then you added a platform fee, and just suddenly the consumer was willing to pay. And so at least my belief always when Harsha and Swiggy started Instamart, and it was a question of will people pay the extra fee? Does it really matter? I was kind of more optimistic. Obviously, to get to the unit economics which works was always you needed large volume. But having seen the success of Swiggy, food delivery, the willingness of the consumer to pay, the willingness of tier 2 cities outside the top 7 to pay, I actually thought this could make a lot of sense.
Right. Harsha?
Some of this also, Chandra, to add to Sumay's point, actually the model and like its market fit are very different from other parts of the world. Like I said, in India, this version of something purpose-built for, let's say, the urban consumer, the top 100 million consumer, doesn't exist in India. But it exists in other parts of the world. That's a big difference. You will find a 7-Eleven in a bunch of places whenever you go to a London, to a Singapore, to a New York. So that was already, there was a form of this convenience left. The other big difference is also that in the other parts of the world, quick commerce kind of was built only as a top-up based experience, which is a much thinner selection. I think here the category has evolved very differently, where the lines start blurring between just going for a distress purchase versus also building a dependence on even larger baskets, which has changed the viability of the model.
Right. Harsha, if I look at how Swiggy has evolved in the last decade, right? In a sense, you were the first mover in many of the categories that you are in. I mean, you started food delivery first. Zomato didn't believe in food delivery for many years. And it was the same with quick commerce, right? You built Instamart literally from the ground up, and then they made acquisition, and then Zepto came in, and so on. So you were the first mover in both categories. But, have you been able to sustain that first mover advantage?
I think we would have it much harder if we didn't have the first mover advantage. That's for sure. I think being at the forefront of it, being able to pioneer some of these categories is the oxygen, that is the long-term oxygen for the company also. We actually pride ourselves on that tinkering culture. And I think it's 10 years, many cycles, many learnings. And we're obviously going to put all of that to work as we think about the next innovation and then some more and then some more after.
But what else do you see? What's the next big
That's
bet for you?
That's the reality about innovation. You don't know what it is going to be before you put it out there. Unfortunately, we have to put 10 things out there and 9 out of them die, and finally there's one that shows up, and that's how the cycle operates. So we'll keep tinkering, and we won't know till the consumer votes with their thumbs that, hey, this is an innovation that I want.
So is Swiggy still the leader in food delivery, say, in the South, in quick commerce in the South? Because your rivals have been making noises that perhaps they are the leader.
Unfortunately, I can't comment on any market share. As you just congratulated me in the beginning, we just confidentially filed, so...
But having a listed competitor, is it a good thing or a bad thing? The good thing is, shareholders know this business. They know what metrics to expect. They know what is GOV, etc., what to expect. But the flip side is your competitor has been profitable for 5 quarters in a row. And, you're not profitable yet. What kind of pressure does it put on you?
Right, like you said, it's a good thing and a bad thing, and there's a net. That was the question. I think, of course, even general for, let's say, companies, tech companies that have gone public, there's a much better understanding of how these new age tech companies operate. There are lots of unknowns that are slowly becoming knowns to the regulators, to the market. With us having a benchmark means that we don't have to explain what on-demand means, what gig worker economy means, what hyperlocal means. All of these are positives. And I think the negatives are obviously quarter to quarter you are going to be compared on the trajectory. And we definitely want to make sure that it's a good trajectory, and there will be many quarters that are good, maybe some that are off, but I think it's a net positive for sure.
Right. Whichever, top categories there are in India, it's mostly been a duopoly, right? I mean, if, for payments, it's what, PhonePe, Google Pay, mobility, Uber, Ola. And for food delivery, it's largely been Zomato, Swiggy. Do you see quick commerce being a multi-player category? I mean, is there space for 4, 5, 6 quick commerce apps?
It's very hard to predict that right now, Chandra. We are in like year 3.5 of quick commerce. If you ask me year 3.5 of food delivery, there were many more competitors at the time. So it's really hard to tell. I think the category is still playing out. I think the penetration is still in early stages. Many things will happen in the next few years, and I have no crystal balls.
Right. Sahil, your fortunes in a sense are tied to how the e-commerce industry performs, and that itself is tied to macros and consumption and so on. The last year hasn't been great for e-commerce. It's slowed down. How is this fiscal looking like?
Obviously, I can't make forward-looking statements, but that said...
No, in terms of the overall sentiment.
Yeah, no, to be clear, look, first of all, I think it's a little bit of a miss that our fortunes are dependent on e-commerce. The reality is it's about half our revenues today, from being about 100% of our revenues maybe 4 years back. We've been pretty clear about one thing. The value of delivery is not just in the parcel delivery service we provide for e-commerce, but in the fact that we're the largest integrated logistics company. And India spends over 200 billion on logistics overall. It's nice to say we're the largest player in this space, but we're $1 billion and change in revenues. So I don't think we're indexed to sort of what happens to e-commerce in any given year. I think the e-commerce market will do what it does. It's of course dependent on consumption, top of the funnel. And when it grows, we're the lowest cost service provider with the widest reach. So, we'll continue to gain share. What we're really worried about is making sure that we provide a high quality of service in what is becoming an increasingly variable operating environment. And when we do that, we gain share in freight, we gain share in warehousing, we gain share in supply chain services, which are all much larger than the e-commerce market. So our fortunes are more sort of linked towards our ability to gain share from the unorganized market in those sectors. And e-commerce is where we began and what we're best known for, but we're not really as dependent on it as you think.
Right. What in your mind is the biggest business risk for you? Is it, more of the clients you work for investing in their own captive logistics, for instance, like what Meesho has done?
No, not too many of our clients have the, how should I put it, the fluidity in their strategy. And nobody in their right mind will build a logistics company, right? So there's only 3 e-commerce companies which have tried it. So no, I don't think that's a big risk for us overall on e-commerce either. The reality is the three big players have done what they had to do. We're more than probably half of the third-party logistics market. So not too concerned about that. The biggest risk for us is execution, right? It's an execution-heavy business. We have to build warehouses, we have to operate trucks, we have to employ 75,000 people. That's the real risk in our business.
Right. Final couple of minutes. So, from all three of you, your views on the current state of the Indian startup ecosystem. Is the momentum back? At least from a tech IPO perspective, it's been a very good year. Sumer, you can start.
I think for me, I don't know why they call it the startup ecosystem. I don't think there's startups anymore. I think it's center of plate, it's established, it's going to take more and more market cap. The mutual funds have understood it, the public market has understood it. So it's really going to be center of plate for India. So I think that's what's exciting. There's, like Harsha was saying, you don't have to keep explaining things again and again. I think what's required more is where's the next Harsha, where is the next Sahil?
Have you found them?
Looking hard. You keep asking. That's why we haven't put the 50 million. So we're looking, and that flow needs to continue for, let's say, at least I don't know, in 5 years. We are a $5.5 trillion market cap today. The NSE, 25% of that should be tech, and for that we need a lot more of that pipeline to come through.
Sahil?
Yeah, I don't know if I'm qualified to answer that question on the state of the
You're
Indian
a listed
startup
company
ecosystem.
only for some 2 years.
State of the Indian startup ecosystem is probably fine, I'm sure.
No, but give us an overview. I'm sure you read about startups.
Honestly, I try not to, but no,
Sahil makes a great point. I agree with him.
Yeah, you've got the wrong two people for this conversation. I'm sure it's okay. There are a lot of companies which are starting up in interesting spaces in D2C, etc. We see it from a logistics standpoint. A lot of interesting logistics tech companies, but that's all I know. I'm really not qualified to answer that.
Right. Harsha?
I agree with Sahil.
Always agree with your board member. That's a good strategy. But as we wrap up, Sumer, as someone who's seen Harsha and Sahil over the years, what's the one thing that has changed about them? What's the one thing that hasn't changed about them? This wasn't part of your question list, so you have to tell me on the spot.
Okay. What's changed about Harsha is, I don't know, too thoughtful. I think he's getting ready to go public, so he's being more measured in the way he answers.
But hasn't he always been very zen?
No, he's been zen. But that doesn't mean, like, I think he was a little more, like, you could get more answers out of him, more direct answers. Now he's, of potentially billions and billions of market caps, he has to be more thoughtful. I think what's not changed...
No pressure, Harsha.
I think what's not changed, which is obviously remarkable, and I think that's what the upcoming entrepreneurs need to learn, is, what you see is what you get. There's this huge amount of humbleness, which is not changed from when I first met him in a bungalow in Koramangala, I think, and that was the boardroom and his office and his home, I think. So, Sahil, I think, is, what's not changed is I think he is one of the most data-driven entrepreneurs I've met. Every answer is lack of emotion and very data-driven, which is good because that's how you build a hardcore, like you said, a very heavy logistics business. What's changed is that
he's based in Goa.
As a public market entrepreneur, he finally has to come out and give interviews, which I know he doesn't like doing.
We are glad he does that now. Dr. Devi Shetty is here for his next session, but before we begin that, I'm going to, ask Sahil and Harsha, what's the one thing that has changed and the one thing that hasn't changed about Sumer, except for the fact that he moved from Northwest to SoftBank?
You first.
Should I start a timer for this question?
This is the hardest question of the evening. No, I think what I appreciate the most, and that hasn't changed, is Sumer's super direct. I think it's just very taxing for an entrepreneur to second guess and read an investor's mind as you go along. And I think that is one of the biggest things that builds trust in relationships. Things may be up, things may be down, but keeping it real for each other is the backbone of a good founder-investor relationship. And I'm pretty lucky to have that, and that hasn't changed through all of these years. What has changed?
He's based in London.
Yeah, that's a big one.
No, but you tell me, what has changed? Sumer, you need to spend more time with both of them.
That's true.
Struggling to think of changes.
Looking sharper.
On that note, thank you very much.
So much. Thank you. Thank you.
Thank you so much. Thank you guys and thanks Chandra. Ladies and gentlemen, you all have been a wonderful, wonderful audience today, and our final session for the day is something straight from the heart. Because we have in our midst Dr. Devi Shetty, a visionary cardiac surgeon who made high quality healthcare affordable and accessible. For the first time, he will share the stage with his son Viren Shetty, the Vice Chairman of Narayana Health. Please welcome the father-son duo on stage. With a round of applause. Do I need to tell you all that again?
We have all our prepared questions ready. Devi Shetty. So I was thinking about how we would structure this interview, and I thought we can do it. I asked Dr. Shetty a question, he asked me a question. So let's start with the first. We'll go back in time to 1988, 1980, late 80s. You're a very successful cardiac surgeon in London. You're working in, at the time, the world's best center for doing cardiac surgery. You're doing the work that you love. You have a wife and two very
and the richest man living in a mansion has the same network. Is there any difference? Is there a TV channel only for the poor people or a TV channel only for the rich people? We have democratized entertainment. Similarly, healthcare will also reach out to everyone. The reason is, healthcare is not limited by any finite component. It is delivered by people, and we are blessed in having 1.3 billion people, and some of the outstanding doctors, nurses, technicians in the world, they're all Indians. So we are a privileged nation. Our only missing link is people do not have the money to pay for the healthcare. We believe health insurance will transform, and that will become an agent of making the working class people and the poor people to pay for the healthcare. And that transformation will happen very, very fast.
If both of you, like suppose your dates of birth were exchanged, means Dr. Devi Shetty was young as him and Viren was
the situation exists now where startup founders who have really ridiculous ideas can come and get it seeded to, because who knows, it could work. But I would say that would be the big difference. If I had to start NH, it probably would have not been started.
I think, if I have to think back, the me as Viren now, maybe it's flattering. I would have done exactly what he has done as a son. I don't think I expect him to be anything different. Thanks.
Hello, sir. Great to hear you. I have two questions. One, you mentioned that obviously launching your own insurance
Then one of the apps actually has listed Dr. Shetty as the patent holder for an algorithm that will be used for doing the clinical decision support. This is something that doctors use for being able to prescribe. And Dr. Shetty works as the product manager for one of the applications for the startup that we created. So the support that we talk about, this is...
And I think Dr. Shetty deserves a standing ovation.